So I just want to do a quick video on, trading and how to have, signals or indicators or something in your favor before you put on a trade. Um, you don't want to blindly put on a trade because you think something is going to happen. If you haven't looked at it from a technical perspective and you can clearly see signals, enforcing what you're thinking. So for instance, this is AMD, a 2-minute chart. This is Friday, November 13th price action. I'm gonna do, we've got our range, trading range here from the opening bar. Then we've got the range for this inside bar here. So looking at this chart, what you got for the bearish case, you get your opening bar and then you get a red inside bar. And then following that red inside bar, you get a red bar that breaks us out of the range of that first inside bar. If you were a quick mover and just jumped off the open thinking the bearish case for this trade, you shouldn't. You should always wait, 5 to 8 minutes before you get into a trade. But if you didn't, you saw these two red bars, inside bar breaking out of the range of the inside bar, you could think this is a bearish move. And you've also got MACD showing red here also. So I'm going to circle these points. As you can see, when the MACD is red, that red is reflected in the stock or in the price movement. Red here, it's reflected in the movement of the asset. We got red here, it's reflected in this move of the asset. So you want to look for signals, in instances where your signals, your trading indicators are lining up. These line up with the bearish case, bearish case, bearish case. But what's important is how many indicators you have in your favor. So for the bearish case, then we got the bull case. So we've got one bearish, that's a bearish. And then we've got MACD, which is bearish. So we've got two for the bearish case. Now the bull case, we've got 1, 2, 3, 4. We got our 4 moving averages. So in an instance like this, which one is the stronger trend? The bull trend. We've got more things in our favor. We've got more for these bears to go through to turn this bull trend into a bear trend. It would be more work for this market to go down right now as opposed to up, even though we've got two red signals. So just jumping off of a signal just because you see a signal and not taking into account the other signals, or the dominant signals, it's not a great way to trade. You'll lose far more than you'll win because you're not looking at the whole picture. You're not using the Gestalt psychology, looking at the whole instead of just one part of the whole. So before you put on a trade, you want to have as many indicators in your favor as possible. So that is for today. Let's try yesterday's price action. Let's do one more instance. Let's go. We are. All right. So let's see what we've got. So we've got the open. Let me see which one is the opening bar. I want to say this one. So this is the opening bar. Let's write off our range. Okay. Also note we're at a tight state where all the moving averages are kind of tightened. So in areas like this, you really want to look for the dominant breakout. That dominant breakout usually is a strong breakout and usually sets the trend for the rest of that day. So let's see what happens here. We get our break to the downside. We break out of our gap, forceful break, and then we almost set like a little floor area here. And once again, this is the opening bar. So 2, 4, 6, 8. You want to wait about 5 to 8 minutes before you jump into a trade, because you kind of want to wait. There's a lot of traders who use the 5-minute chart. They don't utilize the 2-minute chart. So you kind of want to wait till you get that first 5-minute bar for those guys, so they can kind of get a feel for what they want to do. And sometimes you see a lot of money come in at the 5-minute mark, 10-minute mark. Those money influxes, they coincide with the bars on the most prominently used trading charts. 2-minute, 5-minute, 10 minutes. Some of the most commonly used charts for day traders. So you'll see action correspond with those time frames. So we got, this is the open, 2, 4, 6, 8. This is our first 8 minutes. Here would have been a great time to start going on this trade. But back to our trends. We've got 3 moving averages above us. These are functioning as resistance levels right now, pushing the price action down. You've got price action going down. So in this instance, we've got 3, 4, 5 in our favor for the bearish case, and 1 in our favor for the bullish case. You can see the 200 period moving average as a support level right now because you haven't broken it. So this is really the only one that's given us any sort of a bullish lead-in right now. And it's the first one we get until we get to this point here, until we get this green bar here. So now we've lost one of our bears for the MACD. We got 2 bull signals in our favor, but we still got 1, 2, 3, 4 bearish in our favor until we get this bar here, which is at our 2, 4, 6. So this is where you want to go into this trade. As you can see, the bull trend starting to emerge. We're at a floor here. Price action is bouncing off this floor. We get a, not an inside bar, but a bar that takes us way above the 50% retracement level for this down move. And we're briefly breaking out of the range of the lowest bearish bar. So let's write the cases out. Bear. Sorry for this ugly handwriting here. Now, and these cases will change, as you go out the trading day. You want to see which cases, which one is holding, more pressure and resisting the push of the other. So, till about here, until 9:34, 9:35-ish, the bears were winning. We had all of these bearish cases except for the 200 period moving average. And then by 36 after, we started to lose some of those bearish instances. Price action is turning positive, so we lost that. We still have the 200, and we've gained the MACD. So we've got 3 in our favor for the bull case, 3 in our favor for the bear case. As you can see, the bulls are gaining steam from the bears. So we're going to go 3-3 right now. So at this point here, we're 3-3. Still 3-3. We still have the negativity of these guys, but this positive pressure here pushing that price action up is very, very bullish. And this bullish move takes us all the way above all 3 of our bearish cases. So, at 9:38, we are totally in the bullish sector. Totally, we're above everything, but we do get a little bearish activity here. It's enough to break us out of our 3 moving averages briefly. Then we get it back and we ride that bullishness for a while. We rode that bullishness for a while. So as you can see, the more things you have in your favor to state and support your case, the better trade you can put on. And you must know that who's winning and losing, it changes depending on, the time of the day, the price action, the movement of the stock, all these technical indicators and figures. All of this affects that bear and bull case. And it's your job as a trader to dissect this stuff in real time to see who's winning the battle. You want to put your trade in the direction of the winner. Or when the battle is about to turn to the other side, you got to find a way to time that turn. This here was a turn. At the open, we had a little bit of negativity, enough to have this big bar here, which could have been guys just selling to get a better, lower price to buy back in. Happens a lot. And you see this bottom forming here. From that bottom, that is a great point. This is a reversal point. Talked about that in a previous video. You want to look for these reversal points and put on trades to take advantage of that reversal into the bullish case here. It just so happened this was a very massive move that wiped out all of that negativity from the earlier minutes. All of it. It's rare to get that right there. This is basically a bull 180. When you get a bearish move and you reverse that move quickly. Bull 180 is a very strong signal. Very strong trading indicator. Very one of the strongest. But that is how you utilize the technicals in your favor. You count and you measure who has the lead, who's winning, who's losing. And that is how you trade. You take all that into account and you trade accordingly. The more you do it, the better you get at it. So I hope this has been helpful. This will be one of the trading insights videos, and I will produce more content, as the need arises. Thank you guys for watching, and happy trading. Thanks.